Welcome to SMC Trading course. Hope you all doing great. In this video, I'm going to explain order block. So what is order block? The specific institutional candle in supply or demand zone where a large order being placed by the smart money causing break of structure either to the outside, which validates the demand zone, or to the downside, which validates the supply zone. Meaning, when you see a the market is moving down, creating breakout structure to the downside, you know that the order is being placed from this supply zone here, and when the price reaches this supply zone, the sell orders get activated and the price shoots down, again causing breakout structure to the downside. Again, the price shoots up to this supply zone here, the sell orders get activated and the price shoots down. Same is the case for demand zone. The price comes back to this demand zone, the buy orders get activated, the price shoots up causing breakout structure here, the price comes back to this demand zone, shoots up, comes back to this demand zone, shoots up. So you know that comes back to this demand zone, comes back to this demand zone, comes back to this demand zone. So you know you could identify these as zones, but when you place your trades, you need to understand the order blocks, because you have to target the specific candles which results in the breakout structure to the downside. So the specific institutional candles which causes breakout structure to the downside are the order blocks. Now you have understood the order blocks. So now coming to the institutional candles. What are institutional candles? The specific candles which causes breakout structure to the upside or downside are the institutional candles. For demand zones, when the price shoots up like this, comes back to this demand zone, shoots up like this, comes back to this demand zone here, shoots up like this, causing breakout structure here, comes back to this demand zone here, and again shoots up like this. So there is simultaneous breakout structure to the upside like this. There is simultaneous breakout structure to the upside, validating these demand zones. Demand zone here comes back to this demand zone, validating this demand zone, and then shoots up. So when the price comes down like this, and then what happens next is that the price shoots up. Again the price comes down, and what happens next is that again the price shoots up. So the last sell candle which causes breakout structure to the upside here is the institutional candle. The last sell candle which causes breakout structure to the upside, causing breakout structure to the upside here, is the institutional candle. Same is the case here. See, the price comes back, taps to this last sell candle here, and again the price shoots up. So when you see the last sell candle which causes breakout structure to the upside is the order block in the demand zone. Again, the last sell candle here, which causes breakout structure to the upside, is the order block here. So now I will be drawing another order block here. And next I will expect the price to come back to this demand zone and then shoot up. So this is what institutional candle in a demand zone is, and now I'm going to show you for supply zones. When the price moves like this, again causes breakout structure to the downside, and you could see that there is a supply zone here. The price comes back and taps this supply zone and again causes breakout structure to the downside, comes back to the supply zone, causing breakout structure to the downside. And for supply zone, the last buy candle before this massive breakout structure to the downside is the institutional candle here. So the last buy candle before this massive sell here is the order block here. So now I'm marking this as order block. The price comes and taps this order block here and again shoots down, causing breakout structure to the downside. And when the price comes and taps here, it creates another order block here. What happens next is the price comes and taps here again, causing again breakout structure to the downside. And what you will wait is that you see another institutional candle here. You wait for the price to come back to this zone and you place your limits here. Stop losses may be above this order block and then you trade. So you could clearly understand that for demand zone, the last buy candle which causes breakout structure to the upside is the institutional candle, and for supply zone, the last buy candle before this massive breakout structure to the downside is the institutional candle for supply zone. These are candles with large body and very small wicks. And now coming to the next institutional candle, which is doji. The color of the doji might be green or red, but it doesn't actually matter. There might be a very small green color in doji or maybe very small red color in doji, but the color doesn't actually matter. What is a doji? A doji is a candle with a large wick but a very small body like this. It might be green or it might be red, but the color is not important. I'm saying it again and again. It might be green or it might be red like this. I'm showing you this red. But it doesn't actually matter. So when you see a doji candle here, you mark this a valid institutional candle. Again, when you see a doji candle here, you mark this a valid institutional candle for demand zone. And when you see a doji candle here in the supply zone, you mark that also a valid institutional candle. Here's a doji candle, a valid institutional candle, and also here a doji candle, a valid institutional candle. So when you see for supply zone, when you see a doji or a large buy candle like this, before this massive breakout structure to the downside, you mark that valid order block here. You place your sell limits here and the stop loss above this doji and targeting maybe this low. Similarly, for demand zone, when you see a doji candle here, you place your trade sales, putting SLs below the doji, targeting this high. Or a sell candle like this here, that is a valid institutional candle in the demand zone. You place your buy limits here, setting stop loss below it, and you may target the high. When you see a solid sell candle like this or a doji candle like either of these two, you place your trades in. And now coming to the example, I will show you how these institutional candles are important and how you place the trades when you see the institutional candle and simultaneous breakout structure either to the upside or to the downside. And now moving on to the examples, I will show you the trades that I have given you or the analysis that I've shared, and now from those trades I will be sharing how I mark the institutional candles and how the order blocks played out. I've already said that there are two types of institutional candles, the doji or a solid body candle. This is a trade which I've already shared, Alchem Lab Limited, and what the price does is that the price consolidates like this without creating higher highs or higher lows. It is just a week, and when the price doesn't close, it is not a proper high. So the price consolidates for a long period of time, and what happens next is that the price moves inefficiently, causing breakout structure to the to the upside, and the price retraces back here, and then the price shoots up again. And what you could identify is that there is a demand zone here which causes breakout structure to the upside, and before it causes breakout structure to the upside, it consolidates a bit, and here you could clearly identify a solid doji candle with a very small body and a large wick. See, the very small body and a large wick. So you place your trades here, and I have shared this already. You place your trades here, putting stop loss below this level and targeting the high. So this is a 5.84 risk reward ratio trade. And now I will be sharing you another example. This is Dalmia Bharat. I've already shared you. What happens is that the price moves up, consolidates a bit, and again causing breakout structure here. This creates a slight liquidity here, comes back to this demand zone here, and again shoots up, causing breakout structure here, comes back and again shoots up. So you could clearly identify these as a valid demand zone, and I've shared this. This is another valid institutional candle here. You target this candle because it is a large sell candle before this massive move up, causing breakout structure to the upside. So you target this candle, place your trades here, stop loss below this level, and you may target the recent high. It is a 3.65 risk reward ratio trade, and I've already shared this analysis before taking the trade. Now coming on to the next chart, this is Bajaj Auto. I traded this on 2-day time frame because it was very clear on 2-day time frame. You could see that the price comes back, consolidates a bit. This is a consolidation, and what happens next is that the price shoots up, breaking this structure, breaking these minor structures and breaking this major structure too. And what happens next is that the price creates liquidity, comes back to this demand zone, to this order block here, and then shoots up again. So you could see that when it creates a consolidation here and a simultaneous breakout structure to the upside, there is a solid sell candle before this massive move up. So now you could target this order block and you place your trades there, putting stop loss below this order block and setting your take profit levels here. So I am just showing you the order blocks which are very important. Don't rush and place your trades like this just by seeing order blocks. There are various other confluences which I will cover in the next topics. So coming to the next example, I shared this trade. You see that the price moves up, comes down, moves up, comes down, but doesn't tap to this order block. So what happens next is that it creates liquidity like this, comes back to this zone, again shoots up, causing breakout structure, solid breakout structure to the upside, comes down, and this creates equal low, which is a form of liquidity, and I will cover this in the next section. Comes back to this order block here, and then it moving like this. So now I expect that the price to come to this zone, and it is a risk-free trade here because I have booked partial. Now I will be showing you how you detect the order blocks here. You could see here that it is a fine candle with good amount of body and small wicks, and the price comes and taps to this order block and shoots up, and this is the last solid sell candle before this massive move up. I will be targeting the solid sell candle here, placing my trades here, putting stop loss just below this candle and targeting the highs. Next, coming to Suzlon, similarly you could see here that there is a solid sell candle before this massive move up, and it creates liquidity here. I have already shared this, and you place your trades here, putting stop loss below this level and placing your take profit levels here. I have already booked partials and setting my stop loss below this level, and I have already shared this trade. Now coming to Chambal Fertilizer, what the price creates is that the price moves up, consolidates a bit, and then shoots down, breaking the structure, so it validates the supply zone here. What you could see here is that there is a solid buy candle before this massive move down. So you target this area, the price comes back to this supply zone and again breaking this structure, again comes back to this supply zone, to this doji candle here. You could see a very solid doji candle here. The price taps to this order block here, shoots down, comes back here, taps this order block here, again shoots down, comes back up, and again shoots down. You could see that there is consolidation here, and before it moves massively to the downside, there is a solid body candle. You target this order block, place your trades here, setting stop loss above this level and targeting this level. As you see here, you place your trades here, stop loss above this level, above the order block and targeting this level. So this trade plays out, and once it causes breakout structure here, you could see another doji candle here in this supply zone, before this move down. So you place your trades here, putting stop loss above this level and targeting this level, and your trade finally plays out. As you see that the price goes up and it moves efficiently here, and it consolidates a bit here, and then the price causes breakout structure to the downside. Again the price rises up, and again it causes breakout structure to the downside. As it rises up, you could see a solid buy candle before this massive sell here and this massive breakout structure to the downside, and you wait for the price to come and tap to this supply zone. You place your trades there, putting stop loss above this level and targeting this zone. This is a trade which is already running, and I've already given you an alert of booking partials and setting your stop loss at break even. So this is it. I've made you understand what order blocks are, and this is the end of this session, and now moving on to the next session.